All right, everyone. Now we're going to do problem 15-5B. I'll put that up there. I think you're doing 15-5A. And it's another statement of cost of goods manufactured. And they tell us the following information is available for Shanika Company and for 2006. So we've got their materials inventories, and then we've got other expenses here. So things like, you can see where I've marked things off: factory equipment depreciation, direct labor. I was looking at all those items that would go towards doing the statement, and that were product costs and period costs. So we're going to fill this one out. Remember, you can find these numbers. You can either take a screenshot of what I show you, or you can follow along on Cengage in the ungraded assignment. But the first thing that we start off with on this statement of cost of goods manufactured is we always start off with work in process inventory, and it's going to be at the beginning of the year. This was for the year ended. So it's for on 1/1 of the year would have been $109,200. $109,200. And this is just like exercise 15-15. So we're going to go through the same steps all over again. So we're going to start with direct materials. So we're going to have our direct materials inventory on 1/1. And that's going to go in this inside column, and it's $77,350. We're going to add to that our purchases during the year of materials. So we had total purchases of $123,500. And that's going to give us our direct materials available. So we're going to add those two together, and it's going to be $200,850. And this subtotal just says this is what we had available to use in production. So then we're going to subtract from that the direct materials inventory on 12/31. And that amount was $95,550. And so we're going to be able to come to our direct cost of direct materials used. And that's going to move to this middle column, and that amount is $105,300. The next step is we're going to put in our direct labor. They give us that in the problem. That's $186,550. So we've got two of our cost components, right? We've got direct materials, we've got direct labor. Now we have to do our factory overhead. And we're going to list those all out separately. I had mine out of order. And again, they'll go on this inner column. So we're going to have our indirect labor. That might be those production supervisors, things like that, of $23,660. The next one is we have depreciation on the factory equipment. You want to make sure you get the right amount there and you're not using the wrong one. So that's $14,560. Then we've got the heat, light, and the power for the factory. And that amount was $5,850. We've got property taxes for the factory. That amount is $4,095. Rent expense for the factory. of $6,825. Got two more items. We've got supplies for the factory. $3,250. And then the last one is that miscellaneous factory expense. And that is $4,420. So then you can total all those up for our total factory overhead. And we're going to carry that out under here. So we've got the $62,660. Just in case you guys think I don't do your homework problems, I do. I do them all. I want you to know I'm there for you. So then we've got our total manufacturing costs incurred in 2000 YX. Or I'm sorry, Y6. Add those three together and it comes out to $354,510. And then we're going to add those two together and that's going to give us our total manufacturing costs. So we want to have that subheading so we can see what we got this year as opposed to what the impact was from our carryover in work in process. Then the last thing we do is we subtract the work in process December 31st. And that amount was $96,200. And that's going to give us our cost of goods manufactured. Of $367,500. And would you pause that for a second? All right, part two of the problem wants us to finish out the income statement, to prepare one now that we've done the statement of cost of goods manufactured. So again, income statement, we always start with sales, which is given to us in the problem as $864,500. And remember, this is a GAAP financial statement, so the next thing we have to calculate out is cost of goods sold. So in order to calculate out cost of goods sold, we're going to take the finished goods inventory on January 1st. So we've got finished goods 1-1. That amount is $113,750. 113,750. Then we're going to add the cost of goods manufactured. So you're going to take this and you're going to input that there. That's the $367,510. We're going to add those two together, and that's going to give us the cost of finished goods available for sale. So when we add those two together, that comes to $481,260. Then, of course, we're going to subtract from that the finished goods inventory at the end of the year. So finished goods, 12/31. So you should be able to start seeing a pattern of how we calculate all this out. We start out with our beginning inventory, then we take any additions, and then we take out our finished items. So finished goods inventory on 12/31 is $100,100. And so that's going to give us our cost of goods sold. So cost of goods sold comes to $381,160. And of course, we subtract cost of goods sold from sales to get our gross profit. And that gives us $483,340. And then after that, we're gonna look at our operating expenses. So we've got our operating expenses. So remember, those are our selling and administrative expenses. So we've got office salaries for our admin expenses. So we're gonna break this down. We've got admin expenses. So we're gonna start that off with office salaries expense. Kind of backed myself into a corner here with my, didn't make it wide enough. So I have office salaries expense of $77,350. I'm gonna add to that depreciation expense for the office equipment. That's why you wanna be sure that you've got your categories correct. $22,750. And then the last administrative is property tax on the admin building. Property tax HQ, I'm gonna put it like that, of $13,650. And so that's going to give me total expenses, admin expenses of $113,750. And then I've got my selling expenses. Remember, selling expenses are those costs associated with getting the finished goods into the hands of our customers. So we've got our advertising expense of $68,250. And then we've got sales salaries. And the sales salary expense is $136,500. And so that's going to give us a total operating expenses of $204,750. And if we subtract those from our gross profit of $483,340, we come to net income of $164,840. So I know these statements, they're big and they're long and they go on. So make sure you contact me if you have any questions. Please email me at my work email, not through YouTube, because I don't look at those. Thanks.